Hey, what's up, everybody? This is an unannounced live stream. If you join, great. If you don't, it'll just be a recording. But I really wanted to create a video today, and I haven't gone live in a while. So I decided to do it via live. So, what I'm going to go over in this video is talking about the market, the technicals, mainly the technicals, the NASDAQ 100, the S&P 500. Maybe I'll look at some individual stocks. But, you know, I'm very, I'm just on fire. This January and February was my birthday the other day on Valentine's Day, February 14th. And I have just been on fire. My call outs have been almost perfect. I've been making money. I've been sharing trades with the Patreon. It's just this has been a good time. So I wanted to talk about the market, talk about some technicals, and if anyone's on, I'll take what stock you want to look at. I don't have lots and lots of people that come and see me like some of the bigger YouTubers. So odds are we'll look at your stock. Hey, hello Nicola. Hello Cameron. Hey, Cameron, OG. How you doing, buddy? All right. So without further ado, let's look at my bread and butter, the QQQ. Hey, cheap code monkey. How are you? All right, so let's look at the NASDAQ 100. Let me share my screen. Present, share screen, entire screen. Boom, let's go. All right. Okay, so you might learn something today. Even I am upping my technical skills, and I have not too recently, but I've really been just studying Elliott wave theory. And let me tell you guys, Elliott wave theory is a game changer. Elliott wave theory is a big game changer. It has for me at least. So if you don't know what that is, pay attention. I'll try to give it to you. And I try to give people various resources for free in the Patreon in order to study, because it's just been a game changer for me. So the first thing, let me take off the Elliott wave real quick. All right. Okay, so the first thing that for you people who don't believe that technical analysis is a bunch of hooey, you are smart, because it's not. Now, technical analysis is not 100% accurate. What it is, it is a guide. Technical analysis is like a predictor. It doesn't make you Nostradamus, but it does give you increased chances of making a call, right? And when you love stock options like I do, which is a way to amplify the gains or losses, it really comes in handy. So the first thing I am going to show you guys is this. You see how this is it's like a wedge, like a triangle wedge. Well, I want you guys to remember this. Rising wedges and falling wedges are my top two favorite patterns to play in the stock market. Top two, hands down. Okay? A rising wedge like this one, I don't want to sound cliche, but 9 times out of 10, a rising wedge will break out of the wedge to the downside. Meaning when you see a rising wedge, chances are a correction is going to happen. Now, that doesn't mean it's going to go to zero. That just means that a correction is going to happen. The price was coiling up, and it had to take a little breather, and then it can continue up. It's for investors. you should not really care. I'm talking to the traders, okay? I'm talking to the traders. Investors should not really care about patterns. Investors should care about fundamentals. But right now we're talking about technicals. And technicals is about patterns and Elliott wave theory and doji candles and a myriad of other things. All right. So first and foremost, hey Paul, how you doing, buddy? Paul's in my Patreon. Paul, keep me honest here. On Sunday, we have a weekly Zoom meeting, and I do a market recap every Sunday. And I look at where the market has went, and I say where I think it's going to go. And sure as poop, on Sunday, I said, guys, I'm very bearish. I am very bearish. We ended the week at. Let me zoom in for you so you guys could see. We ended the week literally right at the resistance point, right at it. We're right at the resistance line. Look, we ended right at it. The odds are that we are going to go down. Now, what could have happened is we did a little fake breakout. We broke above it and then went down, but no. First thing Monday, on Monday, we just literally touched the support line of the rising wedge. And guys, I do not redraw this. Okay, you can ask Paul. Keep me honest, Paul. This is drawn a long time ago, and I'm just following the pattern. I'm just following the pattern. So I said that we are going to end around this area, and sure as shit, we did exactly that. I do think because of the PPI data that came out today, I do think that's going to act as a catalyst to continue the downtrend and finally break down out of the wedge, right? And I'm going to show you exactly where I think, or the most likely areas of support will be. I'm going to show you. But it's just been my 2 months, man. I've been making call after call after call. I made a Palantir video. I told you guys to buy, and boom, we went up. So I'm on fire. I'm not trying to brag or boast, but it does feel good. So what do I think is going to happen? Well, I do think we're going to break down out of this rising wedge. So where are we going to go? Well, this is where Elliott wave theory comes in. So Elliott wave theory works very heavily on Fibonacci retracement levels, right? Your Fibonacci retracement levels will pretty much dictate where, or up to where, the correction will go down to. The problem with Fibonacci retracement levels is a lot of people think that it needs to go from like the very bottom, or maybe this one and not this bottom, or maybe this bottom or that bottom. But that's not how it works. If you know Elliott wave theory, you know of how the wave set up within every input. So we're in so the impulse wave, basically the up cycle of stocks or indexes, are called the impulses, and the mini waves, as this yellow line looks like, are correction cycles. So you have 5 impulses, or excuse me, you have one large impulse wave, like 1, and then this was 2, and then 5 mini waves within it, and then you start over, and then you go A, B, C, correction. A, B, C are correction phases in the impulse wave. And then you got from 3 to 4, and then 4 to 5. I believe 5 is in. I believe that the top that we reached last Friday, or actually on Monday, the wick made a little bit of a high. That will act as the top of the 5th. So after the 5th wave, what we have now is the correction phase. And the correction phase goes just like it did down here. It goes A, B, and then C. Now, corrections go on 3 main fib levels. The most likely is the 38.2 Fibonacci retracement level, followed by the 50% Fibonacci retracement level, and then the deepest correction where if it passes the other two, it's especially if it's something like an index, it's pretty safe to say there might be a bounce on that one if it didn't occur on the last ones, but nothing's 100%. So how do I find the fib level? Well, I'm going to show you. So this is the Fibonacci retracement tool, right? And what I'm going to do is I'm going to put the 100% mark on the, actually, no, let me reverse it. That way you can see it. I'm going to put the 0% mark on the top, right? Or the top of the move, if you will. And then I am going to put the 100% down here on the where the wave began. Now, the reason I did that is so you can see how well my fib levels correlate with these, excuse me, how well my correction dotted line correlates with these fib levels, right? So you see here 38.382, which is 401.84 on the Qs, is the 38.2 fib, followed by the 50, and then the 61.8, then the 78.6, and then the 100%, because if it goes all the way down to here, that means it retraced 100% of this wave. I don't think that's going to happen, but I do think we're going to get a correction. So with that being said, I am playing. My strategy is that I already have some plays made for us reaching the 38.2, which is 401. So I'm thinking the Qs are going to go that low. I do not think they're going to go much lower unless we get more bad news and catastrophize over it. So for right now, I'm being conservative, and I'm just going to think that the Qs are going to go down to here. And they're going to go down to here around mid-March to late March at the absolute latest, but I think it'll be at or before mid-March, right? So that's where I'm going. That's what the technicals are telling me, everyone. The technicals are telling me that we are going to drop to these levels. Now, this isn't an exact science. I could be wrong, but I am putting my money where my mouth is, and I got some plays. So that's about it. I don't want to talk too much about the Qs and technical analysis. Just wanted to show you guys. How you doing, Alex? And yes, Paul, you're right. Housing information too. All right. So the SPY, I'm actually going to go ahead and skip the SPY because it has a very similar formation to the Q. So it's basically the same thing. So right now, we'll spend a couple minutes. What stocks do you guys want to look at? The first one I see, I'll do. And we'll take 3 stocks, right? So the first 3 people to post a stock that they want to look at, I'll go ahead and do some technical analysis on it. All right, Paul's first, and he says he wants to look at the IWM. All right, let's do that. All right, IWM. All right, I've looked at it before. We were in this box, very clear box. We broke out of the box, broke back into the box, broke out of the box. All right, so now let me delete the box, and let's look at the wave theory. All right. So I'm looking at the daily, and on the daily, it doesn't look like we've actually, I see I need to do some more studying. I don't think that, according to Elliott wave theory, the 4th wave can end, excuse me, the 5th wave, so going forward to 5th, can end under the 3rd wave. There's lots of rules in Elliott wave theory. I got to look at it. So let's look at the weekly. Maybe the weekly will tell us a better story. Okay, the weekly did finish its 5th impulse wave, and it looks like it finished its C wave, and it's trying to create it's one big wave, but it can't figure it out, or maybe the C wave. No, so IWM is not very easy. IWM is difficult. All right, let's go back to the daily. Okay. All right, so what do we know? We know we got around fair value on relative strength index, and then on the week slightly elevated, but still close to fair value. Let's see if we have any negative divergences. A negative divergence is when you have lower lows in RSI and higher highs in price, right? So here's an example of just that, actually. Yes. Okay. So we have a small negative divergence right here. Okay. We have a small negative divergence. You see how on the daily it's sloping down, creating lower lows, while the price action is created higher highs, and then followed by descending RSI, and now price is converging with RSI, meaning it's going lower. So if I had to pick, which I never play the IWM, but based on this very limited technical data, which I could try to build some patterns here, but it'll take too long because it's not very clear. I would say that I am bearish. I would say that I am bearish because we have a double top. Double tops are bearish. We have a double top and we have a close under, right? So it takes 3 to 4 closes to solidify the move. But if this closes one more time, like on Monday under here, then I would go ahead and say that that's a double top. And then so your next question should be, well, Gabe, if it's a double top, how much is the retracement usually? Well, usually the retracement for a double top is around 50% of the recent move. The recent move is 9%. 9%. So if the recent move is 9%, what I'm going to do is just go here, boom, go down to just say 4. I'll just be conservative and say 4. All right, yeah, about right here. So if I had to say that I believe that IWM will go down to at least 196. So that's about $5. Yeah. All right, that's IWM. All right, SoFi. Well, Paul, you said IWM. Give someone else a chance. All right, cheat code MPC. Let's look at MPC. Oh, I've looked at MPC before. Oh, but it was a long time ago. Look, when I looked at it, what was a 100% move? 100% move was over here. That's funny. All right, let's delete this. Okay. All right. On the daily, MPC, Marathon Petroleum, does look like it has just finished. It's not 100% yet, but it does look, unless petroleum gets bullish and we continue on, get a continuation, and then this fifth wave ends up higher. Right now it meets all the rules that I know of. It's above the 3. So the only thing that hasn't solidified it yet is it's going sideways. So if it goes sideways and then up, then the top won't be solidified until it goes down just a little bit. But if this is the top, which I don't know because I don't really follow oil anymore, but if it is, oh, and this is okay. I do think that the top is in, and I'll tell you why. Because this is easier to chart than the previous stock, because it is, my eyes just catch it. This is a rising wedge. So this is a rising wedge, right? And as you can see, it is traveling within the wedge. And if it goes higher, it can go higher, but if it goes higher, then the top will be somewhere around here, and then we'll have to see the fib levels from there. But if the momentum continues to Monday and it breaks below this rising wedge, well, then just like I said in the cues, I think 160. I think 160 is very possible. If it gets too bearish, it can go all the way down to 156. And then I would be a buyer at around 151. Again, this is for a trade, not for investments. This is for a trade, and this is my opinion. All right. I'll take one more. Hey, Chris, nice to see you. Open. Is that a stock? Or are you just saying the word open? Let's see. Oh, open door. Oh, I guess I've looked at this a long time ago, too. Okay. This is a penny stock. No, I'm not doing penny stocks. Penny stocks are a waste of time. They really, really are. Yes, not Monday. Not Monday. I'm sorry, because it is a holiday. Not Monday, Tuesday. All right. All right, Paul. We'll do SoFi. I've made lots of money on SoFi. Traded it almost perfectly. Let's see what we got. All right. SoFi is a stock that lots of people like. I do think that B is in. For those of you who are going to be mad at me because I do think it's going to go down, I have good news. I do think SoFi is going to go down. It doesn't have to go down this low, but I do think it's going to go down. But the good news is that when it concludes its corrective C wave, right? You see this going up, it's going to bounce up high. I'd have to do a little bit more studying to see if this is a full impulse move. But I am bullish on SoFi. Let's look at the weekly. Okay, the weekly doesn't tell me shite. All right, so if I had to, on the daily, nope. I want no, that's too messy. I'm not going to call that a Head and Shoulders. All right, let's see. Let's do some lines, see if it'll come to me. Okay, you need to, whenever you're doing a trend line, you need to connect 3 closing lines. Anyone who says different doesn't know how to do trend lines. So you can start on a wick, but you have to have some touching. Some people say that you can just use the wick. I use more of the closes. The closes. Or the opens, like this red one. Okay, let's put it in the bottom. Even though I think it'll be surpassed. Near side bottom. Okay. Okay, look what I found. Look what I found. But this is not good news or bad news, because this is not a rising wedge. This is not a falling wedge. This is just a wedge. This is a wedge, and the shitty thing about wedges that are sideways is price action will usually stay within the wedge and then break out wherever the fuck it wants to. So if I had to pick, I would pick to the downside. I would be bearish on SoFi in the short term. We're basically at fair value, so there's lots of RSI to go down to get into the oversold territory. Where are we on the weekly? On the weekly, we're also very fair value, right? So because the chart is just kind of just there, we have to use what we got. We got Elliott wave telling us C has more to go, and then we have this wedge. This wedge is telling me that although it can break up or down, I am more bearish. I'm not a perma bear, everyone. I just feel like I've been bearish lately. So anyway, that's my quick synopsis on SoFi. So that's about it, guys. I just wanted to make a video. Thank you for being here. 25 minutes. That's a nice long video. You know, this was unannounced. I appreciate those of you who are here. Thanks a lot. You know, last thing I'm going to say, I got one seat left. One seat left in my stock options deep dive 10-hour course that I'm having. It's so long, I have to have it over 2 days, Saturday and Sunday. We start at 9 a.m. Eastern, end at 2 p.m. Eastern, and then start on Sunday, 9 a.m. Eastern, and at 2 p.m. Eastern. I like to think that I am an expert in stock options, and I think people in my Patreon will agree with me. And the price is $100. I got one seat left. I promise you, I am so convinced that I will teach you more than you ever thought you could learn about options at such a great price that I will give you a 100% money back guarantee, meaning you can take the whole course. If you didn't like it, just say you want your money back. No questions asked. I got one seat left. You got to go to Patreon, look me up, GS Strategies. I'll put the link in the description after this. One seat left. If you want to learn about options and you got 10 hours on 5 on Saturday, 5 on Sunday, you have nothing to lose. One seat left. I hope I see someone else there. All right, everyone. That's it for the night. Happy Friday. Have a good weekend. And I will see you guys on the flip side. Bye-bye.